Thank you, pair traders and potential pair traders, for joining us today. We're going to take you through our top 30 U.S. equities pairs and what they can do for you. This is the November 2020 vintage, the latest and updated set. So what's it all about if you haven't heard about the top 30 before? These are pairs that we preload into your PairTrade Finder PRO software package when you subscribe to our service, and it's a group of 30 stock pairs that have generated trading signals, and based on the last set, the November vintage, the last 12 months in sample backtest show 104 closed trades, a 95% win rate, average winning trade of $694, an average reward risk of over 5 times. The total group produced over $66,794 in profit in those 12 months, including margin costs, commissions, and slippage in that number, and that was based on about a $50,000 equity account to deliver that kind of profit. And what does that mean? That equated to a 9.1% per month average return on that margin required over the 12 months. So if that's interesting to you, read on, and I'm going to take you through what some others have been saying about our service. So what do customers say? Well, we have on the upper left here, we just to say how delighted I am with your product. For the first time in 10 years, I'm consistently profitable. If I can sort out my discipline and stick with the signals, the results would have been even better. Yours eternally grateful. In the middle, I'm amazed that more people are not using your software. I've managed to make $8,000 in the last 3 weeks. I credit that to you, your staff, the great videos, and the excellent software. Let me say that I love your product, and I intend on being a lifetime user. I am truly grateful. These testimonials that we have on this page here were not solicited. These are completely unsolicited. These are emails we get as and when people subscribe and begin using our services and using our support services. Over on the right, I did my biggest profit this year with these 2 trades. He's talking about 2 pairs from the top 30 U.S. equities. And in total, I'm plus 4,700 US this year with your system. Thanks for your support. Jacques Ovray down in the bottom left, I started trading the strategy in September on a collective 2 account, and I also started trading the strategy in my own account at IB in October. I'm just glad that the strategy performs as expected. Backtest equals real time. That's very important. Then perhaps one of the most important comments on the bottom right, I am really excited with the performance of the strategy, and I see the value in the software. That is why I'm persistent. And that comes from Nicola Recchia. He is a UK hedge fund manager, and he has been investigating our software over the last year or so. So what you can see is that a lot of people are using our software and our top 30 and are getting some very good results with it. So why is that? So how do we create these top 30 US equities pairs? Well, each top 30 stock pair has to meet stringent return hurdles and pass a basic fundamental screening. So what do? Let me take you through it a little bit more visually. So if we go into PairTrade Finder PRO, in the latest version, 2.2, you have a button here called Download Tickers. If you hit that, you can choose from 5 different exchanges where we have created lists of pre-screened tickers. And let's just take NYSE Amex NASDAQ as an example. If you hit download, it will immediately download these sheets. And in this case, this is the US equities one, and it's from FinViz. It calculates every night after the close. So it was last done on 27th November after the close. And we apply what we call a fundamental screen, the initial fundamental screen, to the ticker universe. So we first only take mid to mega cap for the top 30, so $2 billion plus market capitalization, and they have to have an average daily volume of at least $2 million. Then what do? Well, this is all structured by industry sector and then industry subsector, and we will take the tickers from, for example, this set we would create a group from this set, for example, chemicals. So it would be basic materials chemicals. We'd take all these tickers and we would backtest each ticker against each other ticker to find the best looking pairs, and then we would do further analysis. So once we get that, we will then screen them to try and find ones that are beta similar, market cap similar, and valuation metrics similar if possible. We also look at dividends, make sure those aren't too divergent. We also look at share prices, make sure they're not too divergent. And that's how we do a fundamental screen. Then when we do the back test, we look back 3 years, we use 63-day look backs, and we enter on plus or minus 2.5 standard deviations as our entry point of the ratio versus its moving average, and then we exit at plus or minus 0.8 standard deviations. That's our exit stretch. Okay, we put in a commissions and slippage estimate per trade. We have a time stop of 60 days max days in trade, and we set the size at 10,000 K a leg, and we do not apply an RSI filter to these signals. So at 10,000 a leg, if you're trading CFDs in IB, even as a novice trader, they'll give you 5-to-1 leverage. It means for each pair, you're going to have 10,000 long, 10,000 short. That's 20,000 nominal. You're going to need $4,000 of margin to hold each pair. And so that's what it's required for each pair to be held in CFDs at IB. Okay, then what do we do after those back tests? Well, we always look at the following as our guidelines for choosing a pair. First off, it has to be co-integrated. PairTrade Finder PRO uses the augmented Dickey-Fuller test, Engel-Granger, so for co-integration, and it presents basically reverse co-integration, so 1 minus the p-value. What that means is it needs to read 0.90 or higher in your co-integration column for a pair to be considered. We sometimes go with 0.88 just as a tolerance because, data discrepancies, whatever. It means it's very, very close to being co-integrated. Average net profit per trade, we want to see at least 300, usually more than 500, and that's at least 5 trades over the 3-year period. We want to see that our compound growth rate is in excess of our maximum drawdown, so we're looking for a positive reward risk pair. And we want to see at least 75% of the trades in the past have been winners and a target of 80% or greater. We also like to see correlations showing that the pairs move in the same general direction together. That's not the same as co-integration. Co-integration is far more important, but it's also indicative that there's a fundamental correlation between the two stocks. We like to see that over 50 if possible, but not always. We can tolerate lower if they're highly co-integrated. And then finally, this is much easier now. Commissions are down across the board with many brokers. We want our commissions and slippage to be less than 20% of our gross profit. We don't want to be trading for the broker. We want to be trading for ourselves. So here's an example of one of the pairs in the top 30, and this is the backtester output. So we would have gone and done what we just discussed. If we take a look at this, we picked a group, and in this case it was infrastructure software. We copied the tickers, we created a group, and we backtested it in PTF Pro. And the results of this one pair looked like this. So it was a 3-year backtest. There were 7 trades. The average correlation was 51%. Co-integration 0.99, so highly co-integrated. Capital allocated to the pair unlevered and not in use if the pair is not in trade returned over 17% during the 3-year back test period. The maximum drawdown was 8% in that period. The total net profit was over $6,000. The average net profit a trade was 867. 100% of the trades were winners, and the average days in trade were about 14 days. On the bottom left, you see the equity graph of the pair over time. These are the 3 years, and you can see it looks great. So bottom left to top right, pretty smooth, not many drawdowns, and very nice winners all along the way. Then on the bottom right, you see the ratio chart. This is a critical chart for deciding whether to choose a pair. The blue line is the moving average of the ratio, in this case a 63-day moving average in these top 30. And then the green line is the daily ratio, and you can see that it's fluctuating over and across the moving average of the ratio very, very many times. We call those zero crossings, and in the case of this pair, there are many, many zero crossings. That's a healthy pair to look to trade on a reversion to mean basis. It's also, you want to see it if possible horizontal. The moving average horizontal over time. If it's trending strongly, it means there's something going on between the two pairs where the relative valuation is changing on a regular basis, and we don't like that as much. We want to see it flat. So that's an example of a pair with the backtesting results. We'd say, okay, great. On a backtest, purely statistical and economic basis, this pair looks great, but do we select it on a fundamental basis? So the next thing we would do, and if you've never seen this before, this is our fundamental snapshot. It's a new feature in Pro 2.2. For example, you just click on the left-hand side here, drop-down menu, and hit Fundamental Snapshot, and then you just go Get Snapshot. And it takes a little while because we have to go and get a lot of information here. So it starts populating all of the different cells here, and we see we've got SWI versus VMW. That's SolarWinds Corporation versus VMware. They're both, well, I'll go through this in a second. Let's just let this finish. 60% done, 80% done, and sometimes it goes behind, and you have to go like that to get it back. So company description, you have a description of SolarWinds Corporation and VM. Then you have the fundamental snapshot, all of the metrics we like to look at. So let's go back into the presentation and take you through that in a bit more detail. So, oops, sorry, this is a wrong ticker up here. This should read SWI VMW. But what do we have? SolarWinds Corporation provides information technology, infrastructure management software products in the United States and internationally. So its products monitor and manage network, system, desktop, application storage, and database website infrastructures. Okay, VMware does many things, but among them is it also provides networking, security products and services that enable customers to connect and operate their network, and storage and availability products, including data storage. So they have very fundamentally similar businesses, which is why they've been put in the same industry subgroup. But it's always good to check because there can be variances within those subgroups. Okay, what do we also look at? So the price ratio between the two is about 7-to-1. That's not that great. We usually like to see, if this were 22, it'd be nice to see this, 20, 30, 40, something like that. But it'll work. We usually go up to about 10-to-1 before we start getting worried. Then enterprise value. Also, it's close to our tolerances. SolarWinds is a much smaller company than VMware. It's still 8 billion. VMware is at 60 billion, so it's about 6 or 7.5 times the size of SolarWinds. That's a bit disconcerting, but what gives it a bit more comfort is that SolarWinds is still over 8 billion, which means it's a mega, well, it's not a mega cap, it's a large cap company in the US. It's all about funds flows. You want to make sure they'd be in the same category or very close to in the same category. Then enterprise value to EBITDA, these are the valuation metrics. This is one of our preferred valuation metrics, and here you see that they're very closely valued by the market in a very similar way, 21 times versus 23 times. We can also see that their price to free cash flow, which is another critical metric, 21 times to 16.5. They're pretty close. Debt to equity, they have a very similar leverage ratio. Neither pay a dividend. And then there's a new thing we've added into the fundamental screen that we like a lot, which is the Zacks rank. And what you see here is they both have the same Zacks rank. And that Zacks rank takes into account a lot of things. It takes into account momentum, technicals, fundamentals, and it's basically put them in the same category in terms of potential for earnings surprises. So that also says that they're quite fundamentally similar companies. So that's what you can do with that fundamental screening snapshot. Then what do we do? Well, here's a quick look at the pair charts on this pair. This is the last trade. It was called on the 27th of October, closed on the 17th of November, and it delivered about $326. It went negative for a lot of the trade. You can see here the ratio went away, but then it came back in and exited with a profit. What I'm going to just quickly go through here, it's something you might want to look at when you're deciding whether or not to enter trades signals, as they're called, is you can see here that the ratio is making higher highs, but on the RSI of the ratio, it's making lower highs, and we call that divergence. So when this signal happened, it was actually divergent on the RSI chart. So that's something that we like to see, and we believe it increases the probability of the ratio reverting to the mean. Over here on the upper right, you can see the plus 2.5 and minus 2.5 standard deviations. This is the plus minus chart. And over the last year, you can see all the entries and exits of each of the trades. This one is above, plus 2.5. It's in line with historic for having successful trades. And then you can see at about 0.5 or something, actually 0.42 standard deviations at the close, that trade exited. Okay, then we have below the plus minus, we have a percent from mean chart. We also find this very useful. This would have given us a bit of cause for concern on this trade, because you can see that historically sort of the resistance here is at about 2% from mean deviation, or at minus 1% more or less, and this one was only at plus 1.25, 1.21%, so it was still within these bands. Now you had a successful trade here within these bands, and and this one was also successful, but we ideally like to see it up here or down here below its at resistance or at support. So that's our pair charts and how we would look at taking trades on one of these top 30. So let's just take you through then the summary of those top 30. That was one example. There are 30 like that. And that group of 30 back tested over the last 12 months. We call it the 25 November 2020 vintage. And it produced 104 trade exits. Net total gross profit 68,000 when you take out the estimated margin. That goes down to 66,794. 99 winners, 5 losers. That's a 95% win rate. Biggest winner 3,000 in one trade. Biggest loser only 261. Average wins about 700. Average loss about 130. And average days in trade about 18 days. Shortest trade was 2 days. Longest was 54. And we impute a margin here to hold this group open on average. And so what we do here is the average days in trade is 18, and that gives about an 8 trades per month estimate. We add 2 trades extra, so a 25% headroom on that. That gives us 10 trades. That, based on 5-to-1 CFD margin at IB, would be about $40,000 to hold 10 trades. Then we add another headroom, another 25% of 10,000. We assume that you had a 50 grand margin in order to trade those top 30 over the last 12 months, and that on that basis, this profit would lead to 133.6 per annum return, which is 9.1% per month. Please understand the disclaimer. These are in-sample backtest results. These are not actual trades. You can download these pairs now, and they are now calling live signals. You can study those, use those for educational purposes, decide whether there's something you might want to trade and how you would go about trading them. Final summary here. November, top 30, there's a 3-year backtest. It's 63-day look backs. Entry is at plus or minus 2.5 standard deviations. Exit at 0.8 standard deviations. 60 days max days in trade. There's 59 tickers, only 1 duplication. 23 industry subsectors, good diversification. We've also got 3 country ETF pairs in there as well, which we think provides further diversification as well. And as always, there are some higher volatility pairs. In 3 and almost 4%. Always check volatility, position size accordingly, take smaller trades on the higher volatility pairs. And finally, we always have to say this: don't trade the raw signals. Always check the news to filter out signals deriving from fundamental value shifting events. And please avoid earnings releases during your trade window and dividend dates unless the pairs have a very similar dividend payout. Okay, that's really important, and that makes sure you don't take trades that are never going to reconverge. Okay, so that's the top 30. Hope you enjoyed. We always have to talk about the disclaimer. This will probably bore you, but it's very important. This is not based on actual trading of securities. It's a hypothetical trading account, and it's for educational and illustrative purposes only. It's your money, your risk. You can use this as a basis to do further study and decide if you want to take these trades. Thank you for your time, and we look forward to helping you learn to trade the top 30 U.S. equities pairs.